Last week, I told you the market would tip its hand. If it was secretly bearish, we'd have seen heavy selling pressure into the weekend. We didn't. Instead, what we're seeing is the classic melt-up I predicted, a steady, grinding climb higher. Why? Because Wall Street loves to climb the wall of worry. Without a specific, immediate reason to crash, markets tend to drift upward, giving the benefit of the doubt to the bulls. This low volume, Santa Claus rally period is playing out exactly as anticipated. But here's the critical twist. This isn't a FOMO moment. This, my friends, is shaping up to be a sell-the-reap opportunity. The 2026 paradox. Bullish story, bearish calendar. Now let's zoom out. My view for 2026 is complex. I am extremely bullish on the AI narrative continuing, with giants like Tesla, Microsoft, and Meta poised to run again. However, we are marching into a midterm election year, a period historically synonymous with market chaos. The stats don't lie. On average, the market drops 19% in a midterm year. But here's the golden flip side. From those lows, it historically roars back with an average 34% gain within the same year. So, 2026 isn't about a straight shot up. It's about preparing for a high volatility roller coaster, a significant sell-off that will create the prime, generational buying opportunity for the next leg up. It will be a rinse and repeat profit cycle. Even if we spike to a new all-time high this week or early January, I believe that peak will be a gift to sell, not a signal to chase. Stock pick number 1, the unloved mouse, Disney. I've started picking stocks for this 2026 game plan. My first pick, which I shared recently, sparked some controversy. Disney, $. I got a ton of comments calling it a wildly unpopular pick. And look, the performance has been frustrating years of consolidation and sideways action. But that's often the setup before a major breakout. When a hated, dormant giant with irreplaceable assets finally awakens, the move can be explosive. This is a watch list play for patience. Did you add it, or are you overlooking it entirely because you don't like the mouse? Let me know. Quick hits, Tesla, APLD, and POET, lessons and levels. Before my number 2 pick for 2026, let's do a lightning round on some other key names, because managing risk is everything. Tesla, $. I predicted a run to $500 in December. This morning, it hit $498 and faded. I'm calling that prediction accurate. I love Tesla for 2026, but I'm now waiting for a pullback before buying more. Patience. APLD, $APLD. This is a case study in respecting stop losses. When I covered it, I said the breakout scenario was strong, but to place a hard stop at $35. It broke that level and plunged to $20. If you're still in, the new critical level to watch is $28. If that fails in a 2026 pullback, a retest of $20 or lower is likely. Poet, dollar poet. Just this morning, I alerted my community that it has printed a powerful monthly bullish engulfing candle. This pattern has a high statistical chance of follow-through in the coming month. This has been an accumulate and hold play for me, not a swing trade. What are your thoughts on Poet? The Fintech favorite, SoFi, $SoFi. This brings us to one of my absolute favorite setups for 2026. A stock that's been on my list all of 2025, SoFi Technologies, $SoFi. The bull case. The bears have focused on its growth at any cost phase. But that phase is over. In Q3, they announced a record $962 million in net revenue and a massive step into profitability with $139 million in GAAP net income. They are transitioning to profitable growth, and the story is accelerating. They re a mobile-first financial hub for the digital generation. 68% of millennials and 64% of Gen Z use mobile banking apps. Only 8% of customers even go into a branch anymore. SoFi is the future. Even the dilution story recently was arguably the best kind to fund a strategic move into blockchain and stablecoins, not a cash grab at a stock high. The bear case and why it gives us an opportunity. The valid concern is further share dilution as they grow, which can suppress the stock price in the near term. This is a key reason why, despite my long-term love for the company, I believe we will get a better price to buy. What the charts are saying, the patient trader's roadmap. Let's get tactical. Since breaking key resistance in August, SoFi has been in a tight, bullish consolidation. Last month, I warned of a potential double top if it couldn't break $32 to 33, and said a failure could pull back to the $23 range. That's exactly what happened. Now, looking forward, two price points are critical for the end of this year. Resistance at $30.45, the top of the current monthly candle. Critical support at $25.15, the bottom of the current monthly candle. My 2026 scenario and trade plan. I am not predicting a crash to $20, but I am preparing for the opportunity if the macro midterm year weakness hits. If $25.15 breaks, it opens the door to a potential drop into what I see as the golden buying zone between $20 and $17. In a broad market sell-off, this is where I would get aggressively bullish, where fear is high but the long-term story is intact. This would be a load the boat moment for me. My play: I am a buyer, but I am waiting for either a confirmed breakout above $30.45 with momentum, and I prefer this for a larger position, a pullback into that $20 to 17 zone during the expected 2026 volatility. Money comes to patient hands. The bottom line: SoFi is a top-tier 2026 story. A respected analyst who called Palantir's massive rallies has named SoFi his top 2026 pick. I agree with the thesis, but I am letting the charts guide my entry. The coming midterm year volatility isn't a threat to this plan. It's the very mechanism that will hand us the opportunity. What do you think? Do you like SoFi for 2026? Do you think it holds $25, or are you waiting for a deeper pullback? Let me know in the comments. Hit like and subscribe, because next I'll be breaking down my #3 top stock pick for 2026. You won't want to miss it. Peace and blessings, my friends. I'll see you in the next video.